Hello, everybody. Lemonade stock, as you're probably aware, and much of the broader market has been falling. There's all kinds of uncertainty in the world around tariffs. I want to zero in this video on Lemonade, give you my current thoughts on the whole situation on the stock. And as you can see, just a review, for the last several months, we had that huge rise, coming out of the investor day around before that and coming out of it. And then the stock for the last several months has traded sort of in the 30s range. And now suddenly we've slipped down into, $25 per share. And I want to give some perspective all the way back from, this was post of last year, June 15th, and I feel like I could post the exact same thing right now. And what did I say back then? I said, and just to give us some context, middle of June last year, for a long while before that, the stock had traded in the teens. If you follow the stock, you're familiar with the journey we've been on, was in the teens and dipped down to a low of, looks like it closed June 14th at $14.38. So after probably being as high as $18, $19, just in May, a month previous, it had slipped from 19 down to 14. People felt like the sky was falling, things were going poorly. And I said, so the sentiment in Lemonade land is bad right now, but the good news is that even though the stock price has fallen, the fundamentals are great. Operating expenses are flat, IFP revenue, gross profit continue to climb, losses are shrinking, and the path to profitability is ever clear. LTV to CAC is at least 4, maybe even 5 or higher, depending on how you calculate it and what assumptions you make. They dominate the renters and growing pet market to become rate adequate in home and car in nearly all markets by the end of this year. Cross-selling and bundling should then greatly increase. The CEO is very excited about the innovations, car product, cash flow positive, adjusted EBITDA positive, profitability are all on the horizon. And you're telling me the price declining has got you down. I'm personally thrilled to add more at these prices. I still feel like that today because, as I'm going to review in this video, even though the price has fallen, there's uncertainty. Maybe the price is going to fall further. Maybe it's going to rocket back up higher. I still feel like the stock's worth $80 to $100 per share, present value, something like that. And we're just now at an even bigger discount if I wanted to add more. I pulled up a few search results here. I'm just going to show with you. I asked Grok, hey, what are some of the best renters insurance companies in the United States? Gave me some answers. I plugged that into Google Trends. You can see Lemonade Renters Insurance, Google Trends from the year 2004 to now, non-existent. And then as Lemonade started, the blue line, you can see the blue line has some seasonality to it each year, but continues this upward climb, upward climb, upward climb. This contrast this to other companies, Liberty Mutual, basically just flatline, hasn't really changed. Amica Renters, same thing. Geico Renters Insurance has the same, again, that seasonality within it, but now it's been actually trending down over the last couple of years, this was, since 2022 is this peak, and you can see the peaks are getting shallower and overall trending down. State Farm also trending down. So you can see I really think Lemonade's going to continue their overall climb and dominance in some of these unloved products like renters insurance, car insurance, and we're going to continue to see this pattern shake out. I also asked Grok, hey, what about the pet insurance? Give me some of the best pet insurance companies in the U.S. I plugged some of those in, and I'm actually going to hit back on here. If you say pets, Pets Best Insurance. So you can see Lemonade Pet Insurance versus Pets Best Insurance versus Embrace Pet Insurance versus Trupanion Pet Insurance versus Spot Pet Insurance. So you can see some of them are kind of flatline, very, very little interest. Blue line though, Lemonade again. This dominant move upwards, and it's actually sort of spiking. Right now, it's at 100% April 2025 for Lemonade Pet Insurance, so probably tons of interest for that product, and that product's going to continue to grow and I think really dominate. And then you see others like, Trupanion has sort of leveled off and is struggling to have as much interest. Others like Spot were doing better and now are having some decline. Embrace as well. And then I'm going to just hit forward on this because I changed this to Nationwide, which is a more popular one. You can see Nationwide over the last year or so, or last couple years, this last 3 years ago, is here, or even At that point in time, around February 3 years ago, it was at 100 and has been trending down, down, down. At the same time, that Lemonade blue line has been trending up, up, up. So just like Pet, I think their products, pet and renters insurance products for Lemonade, are superior, and we're going to continue to see these kind of play out within these product lines. Now I'm going to run through a few more graphs. For Lemonade, up to Q4, their LTV to CAC, what I'm estimating LTV to CAC is still, above 4 for the last quarter. Of course, these have some fluctuations quarter to quarter, and they're obviously just estimates because you don't know exactly what the lifetime value of a customer would be. But you can still see it's a very, very healthy LTV marketing unit economics that are there. Present value of all customers, I shared this in some recent videos. You can see that, hey, as this is a sort of assuming all the present value, lifetime value of all the customers on the book of business. And you can see this has really taken off as the LTV for customers taken off and the number of customers have taken off. Adjusted EBITDA minus customer acquisition costs. So of course, you can't just pretend that your customer acquisition, your growth spend is not part of your finances. Of course, it is there, but it's a great metric for looking at, hey, where's the sort of profitability headed? Adjusted EBITDA minus CAC for Lemonade, I have up till Q4 here. You can see Q4 was actually a positive quarter. You can see this trend line is coming up, and then some of my own projections for this next year, 2025, we're going to continue to see this Q1 might be worse just because of the LA fires, but then probably going to continue to see this overall trend, and then that will continue on in 2026 and onwards as they become, adjusted EBITDA profitable even without minus CAC in that span. So if you just say adjusted EBITDA, you're in here, and in next, by 2026 somewhere, that'll start to pop above the horizon into the positive territory. Churn, churn used to be a huge thing we debated, and then there was a lot of reasons I argued back several years ago. If you go back to some of my older videos of why churn would drop down, management gave reasons, rationale why churn would drop down, and as the book of business has matured, product lines have rolled out further, and books, and as customers have stayed longer and held on longer that are sort of reliable longer-term customers, then your churn has reliably dropped down. Total operating expenses over your in-force premium. You can see operating expenses have been relatively flat. The only reason they've been even creeping up over the last few quarters is their growth spend is so much higher, and they keep ratcheting up how much they're spending on growth, and then in-force premium continues to climb. And I still think, even with these tariffs, maybe there's a little more hesitancy in management, but they'll continue to grow aggressively in their pet insurance, rent insurance, renters insurance. Even if the tariffs stick around, I don't think those are going to be super affected, and they'll still be able to grow into those, of course, and probably still growing into their car insurance. Maybe with a little more caution, so maybe we don't get maybe we don't get 30% growth this year, but I still wouldn't be surprised if they hit their guidance targets for 2025. And a few other sort of metrics we can look at here. Customers per employee. You can see customers employee sort of efficiency of how many customers are serving for how many employees they have. This continues to rise. Another way to think about this is the amount of in-force premium per employee. This continues to rise. And overall, just flipping back to this tweet, there's so much that's still even more on track than it was, back in June of last year. Continues to be on track. All of these things, fast forward a few quarters more in time, continue to be on track. And so I just don't see that. So sure that the market is crashing, the market is falling. It is there's a lot of uncertainty, and it feels very uncertain. But for Lemonade, I still feel like, hey, this is a terrific company in my mind, and I can continue to buy great valued shares at a discount for even longer. Honestly, this tweet by Ironic Ape was really great. He said, he quoted Peter Lynch and said, a correction is a wonderful opportunity to buy your favorite companies at a bargain price. And that's exactly how I feel about Lemonade, at $25 or wherever it happens to go with the price. And then a few more of my own thoughts about the tariffs in general. I love Trump or hate Trump, whatever you think about Trump. I do think that he likes to cause. It seems to me like he likes to stir the pot, he purposely cause people to feel uncertain so that he can come to the negotiating table and feel like he has more of an upper hand if he wants to renegotiate things. So I don't know, personally, I don't know if he really thinks he wants the tariffs to last forever, or if this is sort of the big tariff announcement that occurred, there have been occurring. Is this more of a situation where he's trying to cause a lot of uncertainty, and then he's going to renegotiate this down to much, much, much lower amounts of tariffs, or something, more akin to no tariffs for either side, for either country, going either way. So I just don't think it's really in the interests of the whole, global economy or the U.S. economy that these large tariffs would stay and last and be in place long term. So I don't know. In my mind, it's more. It seems more probable, more likely that these tariffs don't stick forever, and they get renegotiated down to something entirely different. So in that mind, if that happens, in my mind, the market could react very positively, very suddenly, and you could have a huge swing reaction the other way, because this whole situation with the tariffs, it's not like we have some, crazy disease or pandemic that's flowing around the world and people have to lock down, or they're going to be, get sick or something, or there's not some kind of huge natural disaster that's occurring. It's just literally a policy change that's sparking all this uncertainty. So it just as easily, another policy change could flip, in my mind, could flip this the other way, and you could have a massive sort of positive reaction. Now, of course, we don't know if that's going to happen. We don't know if Trump's going to administration will buckle down on this, and will be sort of stuck in this in tariff land for a long time, or maybe the rest of his presidential term. But we don't know that for sure. But to me, that seems less probable. And then even if the tariffs do stick around, Shady Josh, Dividends in 2040, he pointed out, he said, firstly, bodily injury, if you get hurt in your accident, it's not impacted by tariffs, or to a much, much less extent than, say, auto, maybe parts would be, which is a big, but that bodily injury is a big component of auto losses. Then secondly, it's only imported parts affected, so supply, and this tariffs, of course, as Trump, is probably hoping as well, trying to push more of the supply to be domestic. And then third, labor is a huge portion of your auto repair bills. Of course, if tariffs and cost of living goes up, maybe inflation goes up, maybe the cost of labor goes up. But overall, I don't know if, tariffs for auto insurance will be really, really, critically bad. And then also, in Lemonade's case, you think about, this is from their Q4 letter, their car is only 122 million of IFP out of 944. 122 divided by 944 is 13% of their book is in their car. So it's definitely a lesser product. It's something we were expecting and we're hoping for them to grow into this year, and maybe they still will target where they feel the states where they have the best loss ratio and the best safest drivers and the most advantage, and still lean in and drive into it, lean into that growth. But maybe they'll slow just a hair more. Maybe we're lucky that they haven't pushed car as aggressively. And then pet, I don't think there's going to be a huge impact of tariffs on pet insurance. Europe, hard to say, but it's a tiny portion of their book. Life insurance, again, tiny portion of their book. Other one would be renters. I don't think renters renters could have some effect, but again, their loss ratio in renters is probably, might be around 40%, something like that, 40s or low 40s, somewhere in there, if I had, kind of was guessing. And then your home insurance, of course, could be affected. But again, home insurance is a smaller portion of their overall book of business. If you look at my own Lemonade model, this is available to my Patreon members. If you want to join my Patreon, super awesome. There's, home insurance, home IFP is 177 million. Again, out of that 944, so 177 divided by 944. So home, might be like 18-9%. This is an estimate. We don't know for sure because they don't give us this exact breakdown. But estimating, the home might be in that 177 range versus renters at 326. So a huge, very large portion of their book of business in that renters pet insurance space is not, I think, is going to have very little effect from tariffs. They continue to dominate that pet renters insurance space, and I think we'll continue to lean into that and still be able to continue to have aggressive growth this year, and then probably pick and choose where they're growing in the car insurance space, home insurance space, given this very uncertain market. But all of that combined makes me go, man, Lemonade, back to where we started, Lemonade's getting hammered for, really, in my mind, very unfairly hammered by the market. And in my mind, as quickly as it flipped from 30 down to 25, it could flip back the other way, back from 35, 25 back to 35. Of course, non-investment advice. It could, of course, also stay at 25 or go lower. Who knows what's going to happen? But those are my own thoughts, separating just the movement of the stock price from the company's situation, company's foundation, fundamentals itself. So thank you so much for watching. Let me know what you think down below in the comments and how you're feeling about this. And remember, it's in the bag.